Premier Media's Mining Weekly is interviewing Jan Nelson, the CEO of Copper 360, which has just announced yet another advance for the development of copper in South Africa's Northern Cape. This time the signing of a memorandum of understanding for a due diligence to be done by a long-standing company that has been retreating dumps in the field of gold mining. Hi Jan, this is great to chat to you once again. Can we talk about the due diligence that will be done and the highlights of this MOU that Copper 360 has signed with the DRDGold subsidiary, Far West Rand Recoveries?
Hi Martin, yes. The due diligence really comes down to DRD understanding the volume of these copper dumps. They are quite big. So the volume, the grades, and whether these dumps can be economically brought to account. So I think the highlight for us is that, subject to the due diligence, is that we have got the world leader in the retreatment of dumps that is looking at this. And although they're gold focused, they have got some of the best hydrometallurgists in the world. And having a company like DRDGold with us look at these dumps to see if they can be economically extracted.
And what is Copper 360 hoping to get out of this due diligence study on 4 tailings dumps within the Copper 360 fold?
Well, Martin, I think the win will be if the volume is there and the grades are there such that one can recover economically the copper. There's probably 50 to 70 million tons of material lying there and about 450,000 tons of copper metal, depending on which grade one estimates that. And that is a lot of copper. But in order to bring that to account, it would be a high volume operation, and that is what DRD is used to. And obviously that necessitates a lot of capital. And to get that right is the trick. So we're obviously hoping that it will work out, but there's a chance that we might do the due diligence and see that economically it doesn't stack up. And I think that with a partner like DRD, if with them we can't see that it is economically viable in terms of the capital structure and payback, then nobody's going to be able to get the copper out of these dumps. And we've got a big mining license, then we move on.
And how did these tailings build up? What's the history of it, and how do they come to be within Copper 360's list of assets?
Martin, before the reverse takeover took place, when we listed where SHIP did a reverse takeover of Big Tree Copper, this was actually under Big Tree Copper, owned the dumps because they owned the Oak Keep Copper Company, which was incorporated in 1937. And these dumps were formed from that time from the Nababib, Keep and Johannesburg mines. So from about 1940 all the way up to the 1990s is where these dumps were deposited.
And should Far West Rand Recoveries decide to acquire a 50% interest or an interest in the copper recovery operation from these tailings, what would be the benefit of this for Copper 360?
The first thing would be that we have an extremely technically capable partner, that the partner will then jointly with us, if viable, carry the capital cost of a plant, and the cost of a plant like this could easily be 500, 600, 700 million rand, so we don't have to carry that alone. And, we can maintain our focus on the mining license, the hard rock that we bring into account, while we've got a partner who will then be the operator of these dumps. And if we contribute equally, then, we have 50% of the economic benefit. But we've got all those advantages of their technical capability, their operational ability, and also the fact that we jointly would fund any build. So it lessens the capital requirement and we can still focus on the mining license.
And so while DRDGold's subsidiary has vast experience in recovering gold from tailings, could there not be a challenge with the recovery of copper from tailings?
Martin, I think with the hydrometallurgical experience that they have, it would not be a big problem for them to also look at how one extracts copper. And remember, we've also got quite a highly skilled hydrometallurgical team in our stable, and they'll work together. But I don't think that's a big challenge. The bigger challenge here is to understand the recoveries, and that work is fairly stock standard, and then to understand the capital profile of the volumes we have to move. And that's really where I think their expertise comes in. It's not that the hydrometallurgy isn't important. It's obviously critical, but I think both groups have got that expertise in-house, which shouldn't present a problem.
So if you can just recap on your own production of copper plate already from copper-rich waste, and now you're going to do something on a bigger scale. Presumably, as you say, the two teams will work together, and this could be a big win-win.
Yes, Martin, and again, look, I do caution, we have to complete the due diligence. And our view is, if it doesn't work, then, those tailings dams can be used for tailings deposition of new operations, or we can build solar panels for our solar farm on them. So first prize would be, yes, the copper is there, but can it be economically extracted? But if not, there are other uses. So, we continue to focus on the Rietberg mine, which we are busy commissioning at this stage. And the Namakopper plant that we've bought has gone into production and is producing its first concentrate. And then we're about 2 months away from commissioning the concentrate plant, the MFP1 that we've built. So we're quite busy and focused on that which we do. I think the tailings dams were always lower on our priority list because of the huge capital that is required to bring them to account, and that we were more focused on the hard rock. But I think with the advance of the copper price and the fact that we've been having discussions with DRD about potentially them having a look at this with us, has brought it up the list. But it does it for us in a way which doesn't compromise our strategic objectives. If it works, it will suddenly bring a huge copper stream added to our production line, and if it doesn't, we continue with our aggressive growth plan in any case. But I think the timing was right and the opportunity is right, and it doesn't detract from our resources in terms of trying to see if this could be viable.
You've mentioned, that you're really working very actively on the commissioning of two plants at Rietberg and then Rietberg mine itself. But you're also evaluating 5 new copper mining assets. Can you update us on those?
Yes, Martin. As we've announced, we've been doing drilling on surface, and we are currently busy evaluating 2 potential open pits that could, during the course of this year and early next year, come into production. We are currently looking at the Humip East and West mines, which is similar to Rietberg. They've been drilled out. We've now completed the geological evaluation, and we'll soon state a resource for them. And then the mining engineers have already started looking at the mine plans. And then obviously we're looking at Tweefontein, where we recently also announced significant drilling results. So that's our focus, focusing on those mines. That's quite a lot of work for us to do. And that's again why I'm saying this potential partnership, if viable, would help us bring more copper to account and do it in such a way which doesn't distract from our focus.
There's so many things going on there. There's so many balls being bounced. It's often difficult to get that end picture that you may have, that vision that you have for the entire group of operations there. Give us an insight into what you still see as great potential in that area.
Martin, yes, look, we initially, when we listed, we're looking to ramp up over 3 years to 30,000 tons of copper metal per year. That is, our new target is now to ramp up to between 60 and 80,000 tons of copper production per annum in 3 years' time. So, that's almost tripled in production as a result of what we've done. And then, if we discover another Chile type open pit, we've seen signs from our drilling that the potential's there. All these dumps come off, and we still have to tackle the rest of our mining permit. Then, we could easily take the copper production in 5 years up to about 120,000 tons of copper metal. Now that makes us the size of a Kumacao operation, which was recently bought out by the Chinese. So that's the potential of this area, is to have a copper producer in the next 3 to 4 years, which will be similar in size to Kumacao and probably be one of the top 30 copper mines in terms of size. Although size isn't everything, as I've said to you before, we must focus on grade and cost. But we'll be one of the top 30 copper mines in the world.
And finally, Jan, what in your view should be the biggest takeaway from this interview?
I think the biggest takeaway is that our shareholders know that we're ramping up and focusing our current cash flow on the operations, the mines, and it's our intent to pay a dividend. But I think strategic partnerships like the one we've just announced, and again I caution that there's still some DD work to be done, and we could do that, and it's not viable. But strategic partnerships like this on assets like the dumps bring more revenue to the table without the total capital burden, and will add more cash flow to the company and a bigger dividend to shareholders.
That was Creamer Media's Mining Weekly, speaking to Jan Nelson, the CEO of Copper 360, which has just announced the signing of a memorandum of understanding with DRDGold subsidiary Far West Rand Recoveries, relating to the recovery of copper from 4 Copper 360 tailings dumps.